I'm Monica Gibson, and joining me today to discuss what he refers to as a commodities complex is Daniel Smith, Head of Metals Research at Chartered Standard. Now Daniel, gold edged higher today as investors eagerly awaited the FOMC meeting minutes. Can you give a brief outlook on commodities market position of late, and what are the main factors affecting it?
In terms of the gold price at this point, I think what we've seen is that for gold and platinum, those markets have significantly outperformed the wider context so far this year, the wider complex, and that reflects the fact that the global environment is getting weaker. So what we've seen is that global PMIs have fallen below 50 for the first time in June since 2009. So we are seeing some evidence there of safe haven inflows into those two markets. But having said that, we've seen a lot of dollar strength across the whole commodities complex, which is weighing on prices. So those two factors have been broadly offsetting each other at this point.
Some analysts have said that gold may decline due to slowing inflation from China to the US, and gains of the dollar have dampened demand for metal as a hedge. However, others believe that global growth slows and central banks ease monetary policy further, it will bring inflation back and benefit gold. Daniel, do you believe the appetite for the precious metals still remains?
In terms of that side of things, our view is that the key thing really for gold at this point is it's been tracking the kind of dollar very closely. So what we've seen actually is that as central banks start to pump more liquidity into the economy, we'd expect gold to do well. So, as you say, inflation has fallen in China, but more important, I think, is the imports, for example, have been very strong. So Chinese imports of gold from Hong Kong reached 104 tons, which was a record in April, and then fell back to 70 odd tons in May. But both those months are very, very strong, of course, because global mine production is only about 200 tons a month. So those are very, very big numbers in the scheme of the gold market. So what we're seeing is actually China's still got very strong appetite for gold despite those low inflation numbers. So we think they'll actually be one of the key drivers going forward. So as the government re-stimulates the Chinese economy, we think that will help to boost gold demand and prices.
A strong preference for palladium over platinum in the futures market, which was evidenced in the past few weeks, appears to have faded. Some analysts think that while a decline in shorts is encouraging, a meagre increase in long positions indicates the market is still far from confident in platinum's prospects. Do you agree with this sentiment?
Well, we are very bullish on platinum from a kind of medium-term perspective. So I think in the short term it could be dragged a little bit lower by the kind of slowing macro backdrop. And it's worth noting it is particularly exposed to Europe. So a lot of the platinum catalyst demand comes from the diesel engine market in Europe. So when Europe's weak, that tends to have a big impact or disproportionate impact on platinum demand. So clearly that's a significant headwind. But having said that, we are very bullish on platinum in terms of the kind of 1 to 3 year view. And the reason for that is that costs have escalated dramatically in the last few years. So the cost base is up by around about 70% from where it was in 2008. So what we've seen is wage rates have gone up substantially, production has fallen, so per unit wage rates are up very significantly from last year and where they were 3 years ago. Also, of course, the electricity prices have been rising by around about 25%. And producers are under a lot of pressure at this point to cut. So we have seen some early smaller cutbacks by high-cost producers, but I think there's more to come on that side of things. So most likely we're going to see further cutbacks on supply and an eventual improvement in demand once Europe starts to turn around.
Taking all of this into consideration, what are your projections for these precious metals in the short and long term?
In terms of the complex, what we're looking for is most markets to rally in the next 6 months to a year. I think platinum and palladium will probably outperform gold, but it depends a little bit on your time frame. So in the short term, we see kind of rising safe haven flows, which will tend to benefit gold. But then over the kind of longer time period, 6 months to a year, I think the global economy will slowly turn around, and things like platinum and palladium will then outperform gold as the kind of macro environment improves.
Daniel, thank you for your insight. Well, that's all we have time for, but click back for more exclusive interviews from the DukascopyTv team.